Good morning, traders, and welcome to BCR's morning market outlook. First up, let's have a look at the US dollar. The DXY remains supported after posting its second straight weekly gain and its strongest monthly performance since July last year. While softer oil prices and inflation data ease some rate hike expectations, markets continue to price in a hawkish Federal Reserve under Chair Kevin Warsh. Attention now shifts to this week's US non-farm payrolls report, which could determine whether the dollar extends its rally or enters a corrective phase. Um, Technically, the broader uptrend remains intact despite signs of short term exhaustion, with the RSI approaching overbought territory. Resistance is seen at 101.8 and the psychological 102 level. A break higher could potentially expose 102.63 and then the psychological level of 103. On the downside, support is seen around 101.08 and the psychological 101 level, with a break lower potentially opening the way back towards 100. Next up, let's have a look at crude oil. WTI has traded around $70 per barrel after another volatile week driven by geopolitical developments. Fresh US strikes on Iranian targets and Tehran's claim of controlling the Strait of Hormuz for the next 30 days briefly supported prices, while reports of renewed US Iran talks in Doha continued to shape market sentiment. Geopolitical tensions, although have triggered a technical rebound, the gradual recovery in shipping through the Strait of Hormuz remains the dominant force behind the broader decline in oil prices. From a technical perspective, WTI has rebounded for two consecutive sessions and reclaimed short term moving averages, suggesting improving buying momentum. Prices remain within a broader range. Resistance is seen around the 200-day moving average near 73.08, followed by 73.50 and $74. On the downside, support sits around the psychological level of $70, followed by 68.80. A break lower could possibly expose the medium term support around $67 and potentially $65. Lastly, let's have a look at gold. Gold has traded around 4,020 per ounce after rebounding from last week's 7 month low below $4,000. The recovery was supported by inflation data that met expectations and a modest pullback in the US dollar, easing immediate fears of aggressive Fed tightening. However, with US Treasury yields remaining elevated, gold continues to face pressure as a non yielding asset. Technically, gold remains below the Bollinger Band midline at 42.28, keeping the medium term trend under pressure. Key support is located at the psychological $4,000 level and last week's low near 39.59. Resistance is seen at 42.28 with a sustained move above that level needed before the market can reassess a recovery towards $4,300. Lastly, let's have a look at the Australian dollar, which has traded around 68.90 as markets continued monitoring developments in the US Iran negotiations ahead of this week's US jobs report and the release of the RBA meeting minutes. While Washington and Tehran have agreed to resume talks in Qatar, geopolitical uncertainty remains elevated, supporting safe haven demand for the US dollar and limiting the upside for the Australian dollar. Technically, the Aussie maintains a short-term bearish bias, while trading below the 20-day moving average. The RSI has fallen into oversold territory, suggesting downside momentum remains strong. Although the recent sell-off may be overstretched, initial resistance is seen around the 9-day moving average near 69.50, followed by the psychological level of 70 cents. On the downside, support is seen around the 200-day moving average near 68.60 and then 68.33, with a break lower possibly exposing the psychological level of 68 cents.